Hey, what's up? Today we're talking about the altcoin barbell portfolio, where we are trying to take more risks with deal farming, but also trying to aim for higher rewards. Yes, you can earn a lot of good returns already with blue chip strategies, but if you want to take more risks and boost your returns, a good way to do so is with some altcoin exposure. In this video, I will break down exactly who this portfolio is right for, the structure of this overall portfolio, the pros and cons behind it, and a few mistakes to avoid so that you don't lose a lot of money in the process. If you're new here, my name is Richard. I'm a yield farmer and investor. If you want to check out my portfolio, you can do so in this playlist here. I usually update this once a month. We'll take a little bit of a closer look at my portfolio in this video as well. But the reason why I wanted to film this is because a lot of people want some altcoin exposure, but they're not quite sure how to structure their portfolio. So before we look at the actual portfolio, let's talk about who this portfolio is right for. So this type of portfolio is not right for everybody. If you want more return by taking higher risk from alt season because you believe that altcoins are going to move up in value rapidly in the altcoin season, then this type of portfolio could be good for you. If you don't want to speculate on altcoins at all, then we definitely don't want to be yield farming with this type of portfolio, right? If you are a more active investor, if you have time to look into like the different protocols, the different tokens, different coins, then this is also a good portfolio for you, especially if you have had a pretty good track record when it comes to picking winners in the past. As we know, crypto is really risky. Sometimes we see like 80, 90% drops, but a lot of times we also see that 5 to 10x or even 20x to 50x on our altcoins. And if you can stomach the drawdowns, then this is a good portfolio for you. If you can't see your portfolio getting cut by a huge amount, then maybe we want to adjust our altcoin exposure a little bit. You can still apply the concepts in this video, but we definitely don't want to have too big of an allocation if you can't stomach too much of a drawdown, right? So the actual ratio, you can adjust it to fit your needs. But if this sounds like you, then this type of portfolio could be really great. So what we're essentially doing here is when we're yield farming, we're going to have two separate types of liquidity pools, right? I like to separate into like the blue chip LPs where the volatility risk, the risk of loss, and the drawdowns might be less. Those are what I call the blue chip pools. These tokens are likely going to be around for at least like the next 5 to 10 years. Even if there's a bear market, these are the assets that you are comfortable to hold. And on the right side, we have the altcoin LPs. These are the more speculative and potentially higher risk assets. Some of them have solid fundamentals and some of them are just purely speculation, right? So it depends on which altcoins you decide to pick. But basically, we want to have both for this type of portfolio. And each portfolio is going to be generating fees. When we have the fees from the blue chip LPs, we could use it in different ways. The first way on this line here is we're just directly compounding into the blue chip LPs. And the second way we can use the fees is to use this fee to basically compound into this altcoin LP. And if you already have a big altcoin LP portfolio, you don't have to do this as well. You could compound it directly here, or you could use your fees to stack your HODL portfolio, stuff like Ethereum or Bitcoin and even stable coins when the prices are really high and you expect a drawdown. We could be stacking more stable coins. I'm currently stacking more and more stable coins as the blue chips move higher here rather than continuously taking on more risk. And then with the altcoin LPs, we can do the same thing, right? We have the fees. We could compound it into either side. We could add to our HODL portfolio as well. And then we can add to the blue chip portfolio as well. So let me delete these lines here to make it more clear. The ratio you decide would depend on your overall strategy and risk tolerance. So one example might be like, let's say you put 50% of your portfolio in blue chip LPs, and then maybe you put like 25% in the altcoin LPs. You put 10% in the altcoin HODL, and then maybe you put 15% in the blue chip HODL, right? There's no one right answer, but this is a pretty good mix. If we add the altcoin exposure, we basically see like 35% of total altcoin exposure. And the way I like to think about it is for this portion of the portfolio, I would expect a bigger drawdown, anywhere between like 50 to 80% at any given time, especially if it's mainly crypto to crypto pools. For this type of LPs, I personally like to pair like altcoin with Ethereum. And the reason why I like to use Ethereum is because I use it as a unit of currency as well. For example, when an altcoin is outperforming Ethereum, if we're looking at this pendle to Ethereum LP here, if I enter at this green line, which I did around like a few weeks ago, if pendle starts outperforming Ethereum in the next 6 to 12 months, I will have a chance to exit at this zone of resistance here for an Ethereum profit, while in the meantime, I'm just earning more and more fees, right? That's why I like to pair with Ethereum, and a lot of altcoins that have economic value is mostly on Ethereum as well. You could use different assets like Solana and BNB as well if your goal is to take that swing upward and close that position in crypto profit. For these types of pool, I'm not that concerned about the US dollar profit. My goal is mainly to accumulate both like Pendle and Ethereum in this case, and ideally, hopefully Pendle would outperform Ethereum in the altcoin season. Then I can basically close out my profit into Ethereum or into stablecoins, because most likely when altcoins are trending up, if I close in an Ethereum profit, I would also be at a larger US dollar profit. So I personally don't pair too much altcoins with stablecoins unless I have a very specific reason. For example, right now I'm pairing Pengu and USDC because I want to stack more stablecoins. Then I can do that as well. Most of the time, it's altcoin with some sort of major like Ethereum or Solana. And then the rest of my portfolio could be in this blue chip LPs. For example, I'm currently in Ethereum to USDC because I want to realize some of my US dollar profit when Ethereum keeps moving higher, right? At this point in the market, I personally don't want to be fully in crypto to crypto pools. The reason why is if there's a sharp drawdown, if I have some stablecoin exposure that's inside the liquidity pool, my overall portfolio drawdown would be less than if I'm fully in crypto to crypto pools, right? And as the market moves higher, I'm also slowly taking profits into stablecoin on the way up. This is why my current blue chip LP is Ethereum to USDC, and it could be different for you depending on what you hold as well. For example, you could be doing like ETH to Sol or ETH to wrap Bitcoin as well, right? But the main idea behind these pools is it's providing you that stability. We're not really trying to make like a 5 to 10x on Ethereum and Bitcoin either, right? Most likely from this current price point, Ethereum is trading at $4,400 near its previous all-time high. It's most likely not going to 5x in the next 6 months, right? Of course, anything can happen in the market, but in my opinion, it's just not very likely that it's going to go up in value so rapidly. And again, the ratio you decide to put could be very different as well. For example, you could be doing like 80% blue chip and then 20% altcoins, right? Let's say you don't want to worry about like holding altcoins and just focus on crypto to crypto pools. You will still have a lot of gains with that as long as your ranges are wide enough. You don't have to worry about too many hodl position. Then we could also do like 20% altcoin LPs, right? And then we could put the rest here in the blue chip hodl bag as well. Like let's say you want to put 50% in the blue chip LPs, 30% in the blue chip hodls, 20% in the altcoin LPs. That's a great strategy as well. And then when we're earning fees, you could either add to this blue chip hodl or the altcoin hodl portfolio. And for me, what I decide to add every single month could be different. But mainly because my altcoin portfolio is already very heavy, I want to actually focus more on the blue chip hodl or compounding my fees into the blue chip LP as well. So this is personally what I focus on because my portfolio is very altcoin heavy. And in my opinion, if you are already very altcoin heavy, like up to 50%, then we want to be balancing our portfolio a little bit by stacking more stablecoins, more Ethereum, more Bitcoin. That's where we can reduce our risk and make sure that our portfolio don't get wiped out if a black swan event comes that is absolutely going to destroy these higher risk altcoins. And we can take a look at my portfolio really quickly here. I don't hold a lot of altcoins separately because I don't want to track too many positions. My liquidity pools are pretty wide range, so even if these altcoins outperform Ethereum by quite a lot, I don't really mind missing some of the upside because I'm slowly selling my altcoins into Ethereum, right? Something like Pendle, for example, against Ethereum. If Pendle pulls a 3x against Ethereum at this current price point, I'm completely fine with that. I don't mind missing some of the upside. I'm earning some APR in the process, and I also could close my position in Ethereum profit, right? These are the ideas behind these altcoin pairs. For example, Ethena to ETH as well. If Ethena goes up by like 2 to 3x in the next 6 to 12 months, I would likely be able to close these positions for an Ethereum profit. And I personally like to have a mix of large caps to small caps. For example, my portfolio is still pretty heavy in Ethereum. You can see this bigger position here that is meant to slowly sell my Ethereum on the way up. It's earning me some really nice income in the process. And a lot of these pools have some Ethereum exposure, right? But some are larger caps like Ethena and Pendle, but some are mid and small caps like Syrup, Mog, and Pixel here is a very tiny project still. So it depends on how much risk you want to take as well. You will still do really well if you guys just stick to yield farming larger caps that are like above 1 billion in market cap. You could still do really well here. And a lot of times, smaller cap altcoins are going to struggle a lot when the market condition is not too good, right? If we pull up the others chart here, you can see others basically exclude the top 10 crypto. So it's mainly like the mid and small cap that is driving this price action. You can see others haven't really been moving that much compared to Ethereum, right? So in this case, our mid and small caps are likely underperforming. I did close some positions in a loss as well and kind of like consolidated my positions a little bit. I was having too many positions. Some of the thesis behind these altcoins have changed as well. That's why I closed those positions. And this happens all the time if you're an altcoin investor. You gotta be willing to take the losses because we are taking a higher risk, right? When we're taking more risks, the potential for loss is much higher, but also the potential profit that we could get is also much higher as well. So you could do the math here, but my portfolio is still pretty heavy in altcoins. If we just take this dollar amount, my blue chip LPs is less than 50% still, right? I'm still trying to get to 50%. Some of these positions are meant to be like a shorter term time frame ones, like 2 to 3 months. I close out these positions, hopefully for an Ethereum profit, and then I will be rotating into the blue chip LPs, right? So it depends on where the opportunity is as well. Sometimes when altcoins are really cheap, I could have a larger allocation to altcoin. But then when the altcoins start outperforming the majors, I could sell those mid to small cap into the majors to balance and decrease my risk. So let's take a look at like the pros and cons for this type of portfolio. The first is you're likely going to get a higher APR from these altcoins. A lot of altcoins that have higher volume, especially with like a moderate range, you're going to be earning a higher APR compared to something like Wrap Bitcoin, right? A lot of Bitcoin pools have like a lower yield because it's much lower risk. A lot of investors add liquidity into those pools. So then your return would be less as well compared to these smaller cap altcoins. And then the next benefit is we have more increased altcoin upside. So if altcoins are doing really well, our portfolio would grow by a lot as well. This is why I'm currently positioned in more altcoins is because I believe that the altcoin season is coming in the next 6 to 12 months at most. So my portfolio could expect a bigger upside compared to if I just hold like Ethereum, Bitcoin, and some stable coins for like 80 to 90% of my portfolio. And liquidity pools is also a really great way to accumulate the altcoins that you are planning to hold anyway. You want to have exposure to these altcoins. Earning some yield on them is definitely a great thing. And with yield farming liquidity pools, I've actually been able to grow my altcoin position by quite a lot because when people trade these like coins, we basically earn these altcoins that we can keep stacking, right? So this is great if you're still planning to accumulate altcoin for the altcoin season. And the next benefit is we're not going to be wiped out if we don't go fully into altcoins. Some people go like 100% into like mid and small cap altcoins. And then when these altcoins don't do really well because the market is risk off, we can't control the market, right? So if you're fully into altcoins and the bear market comes, or altcoins are just not catching a bid, then your portfolio will struggle by quite a lot. That's why we want to kind of balance it a little bit. For most cases, we want to have our blue chip LPs alongside with the altcoin LPs, right? And with any strategy, if there are benefits, there are also downside. Even delta neutral strategies, you could earn like a steadier income, but your upside is also much more limited, right? So these are the things to consider. The cons is increased risk of loss. The way I think about risk is there's two main types of risk. The first one is volatility risk, how volatile it is. For example, Solana is very volatile, right? But in my opinion, Solana would still most likely be around for the next few years. So the risk of loss is not that high compared to like the mid to small caps, like the meme coins, for example. Then the risk of loss is much higher, right? So it depends on the altcoin you choose as well. And the other type of risk is volatility risk, because if an asset is very volatile, right, like this, the risk of you buying at a higher price compared to a low price is much higher. But in my opinion, that's not a big deal because with liquidity pools, we could compound and drag down our entry, or we could spread out our buys so that we get an average price, right? What we have to worry about is this risk of loss here that we really want to be careful with, because if we lose a big portion of our capital, it's going to make it harder to recover from. And if you don't have a system in place, you might potentially have more management. So I personally don't take that much time to manage my portfolio at all. It takes me like 1 to 2 hours a month to manage 5 to 10 positions because I have a system in place, right? But if you guys are yield farming really actively with very tight ranges and we're basically chasing the range all the time, rebalancing all the time, then it could start to turn into a full-time job. Unless you're a DeFi professional, or if you have like multiple 6 figures or 7 figures under your management, we don't really want to be like wasting too much time in like running too complex of a strategy, right? And having a system in place would reduce that management time as well. So this is like the main pros and cons that I see with this type of portfolio. Again, it's not right for everyone. It's right for me, but it might not be for you. And lastly, before I hop off here, I want to talk about a few mistakes that I see with a lot of altcoin investors. The first is going 100% altcoins. And I'm not really talking about like the major altcoins either, like Ethereum, Solana. I'm talking about like those other smaller altcoins that could be really high risk. For example, meme coins like Pepe. If you're like 100% into meme coins, the risk is going to be very high. Of course, if you're right and these altcoins go up by like 5 to 10x, then your portfolio would grow really quickly. But if you're 100% into altcoins and the altcoins are just underperforming, especially because the win rate is lower, then you don't really have a solid foundation to basically back up your portfolio, right? If we have two different strategies, right, like the blue chip strategy and the altcoin strategy, your altcoin portfolio might look something like this, right? Like really wide swings. And our blue chip would look a little bit smoother here. And it's still very volatile because it's crypto. But at the same time, adding those two would have less risk than just using one of them, right? Especially if you guys are fully into altcoins here. And sometimes we got to realize like just because altcoins have the chance to outperform doesn't mean that it's going to 100% happen, right? Your portfolio could easily just crash and burn as well and never made that outperformance. And the second mistake with this type of portfolio is not de-risking. For example, if you guys are fully into crypto to crypto pools because we want more upside and the altcoin market, like for example, go up by like 3x, and then you're still holding on for more returns, then that's a big mistake in my opinion, because usually bad times are followed by good times. And then after a period of good times, bad times follow, right? Like it's the bull and bear market, it's built into the system. If you're not de-risking when the prices are really strong, you're making a lot of profits, then you're going to be taking on more and more risk. and then eventually you're going to lose most of your profits, right? And this is especially true if you guys have to pay a lot of capital gains tax or income tax. Not de-risking and budgeting for taxes could also put you at a huge tax liability. Some people realize a lot of capital gains and then they reinvest 100% of that capital. And then the next year, their portfolio dropped by 90%, but then they still owe those capital gains tax, right? So make sure you de-risk, make sure you're managing risk. When you guys run this type of portfolio, risk management should always be on your mind. And in my opinion, the diversification could be a little bit tricky. Sometimes if we over diversify, we're not going to be managing our positions properly, like keeping up with the charts, keeping up with like the updates of the projects. So we definitely don't want to spread ourselves too thin. I've seen some crazy portfolio that has like 50 positions. I think it's just too much. You don't need that much. For most people, if you're not that active, I think having like 5 to 10 positions at a time is a good middle spot. But if you're fully into altcoins, having only 1 to 2 positions could just put you at risk as well because you could simply be wrong, right? I'm wrong all the time. Sometimes I'm right. I make a lot of money. Sometimes I'm wrong. I'm trying to minimize the downside when I'm wrong. Everybody is wrong at some point. So we definitely don't want to put all of our eggs in one basket, especially into altcoins. So I hope that was helpful, guys. This is the current portfolio that I run. When the alt season comes, I would most likely be de-risking, getting rid of some of my altcoin positions, keep some blue chip exposure, and adjusting my strategy as I go. And if you guys want to learn more about yield farming and liquidity pools, I've made a ton of diagrams like this. This is what I call like the mind map, where I try to share as much as I can about liquidity pool yield farming because a lot of people have been asking me for like a course and a more structured learning process. This is still in early access. I'm still organizing some of it, but I share a lot of my strategies, like stuff like the LP pyramid here. I've talked about it in my channel a few times, like, asset selection, relative strength, stuff like that, as well as some of the more advanced strategies, like the strategy cycling, where we're switching strategy depending on what the prices do. For example, in an overheated market, we could be running the bear lever strategy, more stablecoin strategy, or the pseudo delta neutral strategies, right? All of those good stuff. I am giving early access to some people that reach out to me on X. So if you're interested in that, then be sure to do that. I'm throwing in a few free extra coaching calls as well, probably for like the first 25 to 50 people that signs up. But you can see I put a ton of time into this. There's 155 lessons that you can learn at your own pace here. Stuff like the crypto basics, building your portfolio, selecting your strategies, how to scan for profitable pools, how to simulate and deploy liquidity pool position, optimizing and tracking your performance, rebalancing your pools, managing your losses, taking profits, and more advanced strategies like the leverage strategies or using hedging, all of that stuff. So if you do enjoy my videos, I go into like a lot of the details behind my strategies, and you will also have access to like the private Discord where you could ask me questions as well. But if you're completely new here, then don't worry about that. I'm not like heavily promoting the course yet. I've only made it because a ton of people have been asking me for a more structured learning experience. So if you're completely new, then feel free to check out these other videos. But if you do want to grab that course, then reach out to me on X, and then I will give you early access to the course. Thank you once again for watching. I'll catch you next time.